I like the name of this company. I don't know why. It just has a strange sound to it. And I thought it just used to be Booz Allen, but now I guess it's Booz Allen Hamilton. I guess Hamilton came along afterwards. And I don't. What is this company? How do you describe them? They're a
They're a consulting
consulting.
firm, I
Yeah.
guess is the best way I could frame it.
Yeah, that's the industry they're in. I didn't know they have an industry called consulting services. That's where they're at. Booz Allen Hamilton. Their symbol is BAH. As I said, they're in the consulting services industry. 9.2% shares short on the float side, so that's a little bit high there. We do see a good start. PE ratio is 13.1 versus 14.5. Price to sales 1 versus 2.2. Price to book value is high though, 10.4 versus 6.8. And then price to cash flow does look good again, 10.7 versus 15. They have a very good PEG ratio, which is price earnings divided by growth, of 2.2 versus 68.8. Over the last year, their earnings are up only 0.6%, but the industry was down 2.6. And sales for Booz Allen Hamilton, sales were down 3.1% for the past year when the industry was up 5.1. They get a 5-year earnings per share growth estimate for the analysts of 7% going forward versus 2%, so that's a positive. They pay a pretty decent dividend, 2.7%. They only use 32.5% of their earnings to pay that out, so that's a positive. Look at the balance sheet. Current ratio 1.8 versus 1.3. That's good. Shows some liquidity. Debt to equity not good. 4 versus 4.2. So this is a high debt industry. I'm not sure why off the top of my head.
Maybe low equity. I mean, if you think about
Consulting, no assets.
no assets,
Yeah.
asset light.
Yeah. So I would still like lower debt though. And I guess then it would depend on the cash flow. We do see, let's see, net profit margin 7.4 versus 8.8. That's okay. Return on equity, I think you're right, 81.3% return on equities are probably very low equity. We do see also free cash flow is $933 million, just below the $1 billion that they have in the industry. So what do you got going forward, Chase?
Yeah, so current price here for Booz Allen Hamilton, ticker symbol again, BAH, $88.42. Stock's been under pressure, 52-week range, the low here, $79.23, and the high, $134.27. Over the last year, the stock is down about 31%. Over the last 5 days, it has shed 13%. Had some negative news for the company come out earlier in the week. They did shed, it looks like, about 5% as the Treasury Department said it canceled all contracts with the company whose employees, this would be not good news, leaked the tax records of President Donald Trump and the billionaires Jeff Bezos and Elon Musk to media outlets. And I believe this did happen a couple of years ago, but now the Treasury is responding to that. As it said, it has 31 separate contracts with Booz Allen Hamilton totaling $4.8 million in annual spending and $21 million in total obligations. So that amount really shouldn't be problematic, but I think it's more the reputation. What other contracts do they have with the federal government? Can they wipe out more of those contracts and hurt their revenue? And also, too, I mean, Jeff Bezos and Elon Musk, I think, are people I would not want to piss off.
No. I mean, they got some money to pay attorneys, good dollars. And obviously, this was some individuals. I don't know what they were thinking, but it happened. And where it ends up, I don't know. And I don't know if you're going to talk about, again, another company, the 5-year return. You see the 5-year return on this is?
I did not know.
1.3%.
Yeah.
Another one. Yeah. Well, you got more to give on the earnings going forward, so let's talk about that, and then I'll give some comments.
Yeah, so target sale price for this company, we go out to March 2027, estimated earnings per share here, $6.27. We get a target sale of $104.08. I mean, you're paying still over 14 times the future earnings of this business. I was kind of hoping with all that negative news, you might find something trading around 10 times future earnings. But again, 14, I don't think that level is worth the risk here, as there could be some negative contract announcements that come out stemming from the Treasury decision as well that could push the stock lower. And that's generally when you like to buy things. It sounds kind of funny after all these cancellations potentially. If the valuation gets attractive enough, well, then some new CEO comes in, they fix the company, they get things going in the right track, then you get a readjustment on the valuation. But at 14 times, I don't think it's worth the risk.
Something about a consulting company just doesn't excite me because it's such an intangible.
Yeah.
You could be great today and the dog tomorrow, which obviously happened with them. And I think it's very hard to project out future earnings for this company. So I don't think that I can remember I've ever held a consulting company in the portfolio. I'm not sure I'd ever want to.
Yeah, I mean, that's a great point. I mean, it's kind of like our business where, you could have the advisor, but if the advisor leaves or if the consultant leaves,
Yeah.
well, the business likely will follow them. There's not as much allegiance potentially to the company than there is the consultant.